Hi, I'm P&C Joe, and I only talk about commercial insurance. Imagine the chaos if your business faced an unexpected disaster, like a fire or a flood. Business interruption insurance steps in to cover the loss of income during such unforeseen events, ensuring that your operations can stay afloat. The challenge for small business owners lies in understanding the scope and limitations of this protection, balancing premium costs with the peace of mind it aims to provide. Keep watching because in this video we will discuss these important topics. What is business interruption insurance? Why is business interruption insurance important? What does loss of income coverage include? What are extra expenses in business interruption insurance? What is contingent business interruption? What is civil authority coverage? What is extended business interruption coverage? How is the indemnity period determined? And a bonus topic at the end. Let's go through these points one at a time. Business interruption insurance is a type of insurance policy that helps businesses recover financially if they have to stop operations due to unexpected events. These events might include natural disasters like floods or fires, which could damage the business premises and make it impossible to continue normal operations. This insurance aims to cover the loss of income that a business suffers while it is unable to operate, subject to the terms and conditions of the policy. This type of insurance is important because it can protect businesses from losing money during times when they cannot operate. Imagine a store that has to close for a month because of a fire. Without business interruption insurance, the store would not earn any money during this time, even though it still has to pay bills like rent and employee salaries. This insurance may help cover those losses, keeping the business afloat, depending on the policy terms. Loss of income coverage under business interruption insurance helps replace the income a business would have earned if it had been able to operate normally. For example, if a bakery that usually makes $1,000 a day has to close for 10 days, the insurance might cover the income lost during that period, subject to policy limits and conditions. Extra expenses are additional costs a business might incur to keep operations going during a disruption. For instance, if a business needs to rent a temporary space to continue working, the costs for this space can be covered. This helps businesses minimize the impact of the interruption and resume operations as quickly as possible, depending on the policy terms. Contingent business interruption covers income loss caused by damage to a supplier or customer's property. For example, if a factory that supplies parts to a car manufacturer is damaged by a storm causing delays in production, the manufacturer can claim for loss of income resulting from the delay, subject to the policy's terms and conditions. Civil authority coverage applies when a government entity prevents access to your business due to a nearby disaster, even if your property is not damaged. For example, if a government orders an evacuation because of a nearby wildfire and your restaurant has to close, this coverage can help cover the loss of income during that time, depending on the policy terms. Extended business interruption coverage continues to cover income loss for a specified period after the business reopens. This is crucial because it may take time for the business to return to its pre-loss income levels. For example, if a store reopens after a month of closure, but customers are slow to return, the extended coverage can help cover the continued shortfall in income subject to policy terms. The indemnity period is the length of time during which the insurer will cover the lost income. It starts from the time of the incident and continues until the business can resume normal operations. This period is crucial because businesses need enough time to recover fully without financial strain. If it takes 6 months to rebuild and restock a store after a fire, the indemnity period should cover those 6 months, as per the policy terms. Lost income is calculated based on the business's past financial records. Insurers look at the revenue from previous months or the same period in the previous year to estimate what the business would have earned if the interruption had not occurred. For example, If a clothing store made $20,000 in sales in July last year, but a flood closed it this July, the insurer might use that figure to calculate the loss, subject to policy terms. The waiting period is the time after the interruption starts, but before the insurance coverage kicks in. It's like a deductible for business interruption insurance. If there's a 48-hour waiting period and a business closes on Monday, the coverage might not start until Wednesday. During this time, the business needs to manage without insurance help, as per the policy terms. I hope this deep dive into business interruption insurance has shed light on how it can be a lifeline for your business during unexpected events. Understanding its various components, from loss of income to civil authority coverage, enables you to make informed decisions to protect your livelihood. If you have any questions or ideas for future videos, please let me know in the comments below.